Good evening, Mike here obviously, and I'm hoping that you've had a good day. Um, I've chosen a quiet evening just to do this final chapter on the how to assess risk before you place a trade. What I thought I'd do this time is on this final chapter is give you kind of a tick list. I have a mental one in my head. It may be that you want to put one on a spreadsheet or on a sheet. Um, but this is the kind of process that I go through. So while I'm assessing risk before I place my trade, the first thing that kind of comes to mind is what chart have I seen the setup on? So is it a pattern that I've seen? Is it a candle that I've seen? What is it that's getting me excited? Because generally for me anyway, it's about getting excited. I keep telling you, I've mentioned in the past, for me, it's not about being in the trade. To me, it's about placing the trade that counts. So generally, I've got to be excited about a setup. So what chart is it, first of all? So once I've seen it on that chart, then what you've got to look at is what makes a good setup. So is it the candle formation, or is it the particular candle that you've seen and you recognize it from many times you've seen it in the past? Or is it because price is rebounding off a very strong support or resistance or trend line? Um, so what makes it a good setup? So you've got clear in your head why you're going into the trade. You don't want to be going into the trade because I need to be in the market, because that's when you're going to get caught out. You need to be thinking, what makes this a good setup? Then something that is very important is, what do the other charts look like? Do any of them contradict your setup? So what I mean by that is, if you look back at the bad trade that I did in November, it looked a good setup on the 12-hour chart. But if I had only looked at the 1-hour chart, then was it a good setup? It was not. And I shouldn't have placed the trade. So on another chart, it could be that price is approaching a very strong support or resistance, and it could catch you out. There could be a number of reasons. So it's looking on the other chart to make sure there's nothing going to catch you out on the other charts. And then the next one is there any correlated currency that could affect your setup? So meaning, is there a strong support or resistance to catch you out? So yet again, in the examples I've given you, it turned out the reason why gold stopped in November was because, like, stopped going down in November, stopped falling in November, and then struggled falling lower, was because on US dollar, JPY, US dollar couldn't break above the 100 moving average. So this is something you need to consider, what's going on in other charts. Then, are you being cautious with your lot size? I mean, this is something that you will automatically have set up on your trade anyway. So it means every trade you do, you're on that cautious lot size. So that's going without a doubt. You're going to be okay there. But then, is your take profit realistic and on the cautious side? Because sometimes your mind can play tricks on you. You can look at something and you can be thinking, oh yeah, I think price is going to stop there. But it's like, how realistic is that? Is there anything else, going back to number 3 and going back to number 4? Is there anything else that could actually catch you out and stop you from getting that realistic profit? So you need to be asking yourself that. Is your take profit realistic? And I would always say on the cautious side. So back to when we did the masterclass, don't kind of don't get into the mindset is, oh, if I could leave that open, I could have made more profit. Because if you left it open, it could have also went the opposite way, caught you out, then you're stuck in a bad trade. So number 6 is very, very important as well. So then number 7, could the price move in the opposite direction for any reason? So I've mentioned a number of times when I've been talking to you that I can place a trade and I know the price is going to go the opposite way. But what I want to do is I know which way price is going to head, or I get just judging by number 1 what the setup is, number 2 the reasons for the setup. Then after I've checked number 3 and I've checked number 4, I know it's a good setup. But what markets do, as we know now, they'll always go the opposite direction first. Not always, but sometimes. There's some trades that I can place where within 10 minutes, 40 minutes, an hour, I've made me profit and I'm straight in and out. And other times it may take up to 4 hours, 7 hours, and I'm in and out the trade. But then there's other times where I know it may go down because I'm looking on a daily chart, weekly chart, and I'm placing the trade off that. So I know the trade is a longer setup. So I know it may be I'm in the trade for a day or two. So what you need to be thinking is, what is the reason why price may go in the opposite direction? Then how confident are you price will come back? So being confident is going back to number 1, number 2, number 3, number 4. Are all of those boxes ticked? Then if all of those boxes are ticked, then you're already there. You already feel as though, yeah, price is going to go down, but I know it's going to hit that target. I've done that many, many times. Went to sleep, woke up in the morning, and my profit's already in cash. So I was very, very happy about that. So that's another important question just to be asking yourself. And if you notice this list, it's all about just getting a clear understanding why you are placing that trade. What makes that trade, look at number 1, what makes that trade a good setup? Then once you've ticked 1, 2, 3, 4, once you've gone through everything, if you can tick all the boxes in your mind or on a sheet, and are all the boxes ticked, then that's going to give you confidence that the trade you are looking to do, you've assessed all the risks, you've assessed all the angles, and that is going to be a good trade to go into. And just to sort of summarize all of this, just so it's not too long a video for you, if you remember in the masterclass, I said there's many things for you to remember, but they're all easy things, and as time goes by, you'll do it without thinking very quickly. And this is what happens to me now. I can look at a setup, then quickly look at different charts, and then quickly look at US dollar JPY, and then I just get a good feeling, and I get excited, and I just place the trade. And it just comes with habit, it comes with use, it becomes doing it regular. And this is what will happen with you. I was so happy to read and hear how well you've done over the weekend. And by the looks of it, you are getting in that good mindset now. What I would ask, and it's all to do with assessing the risk, and it's all to do with risk, keep that mindset. Keep that tick box in your head. Because if you did what I did, or if you do what I did in November, where I was rushing about and I was due to go off, I was choosing a total different currency pair I'd never traded before, and I didn't tick all the boxes. I just went off one candle I got excited about. It's easy to get caught out. I mean, it turned out that one, I would have, if I hadn't closed it, I would have been well in profit because I knew the price was going up. I just lost patience because of the swap. And you don't want to be in that position. Remember, cash is king. Just get in and out your short trades in cash, then you know you're safe. You don't want to get caught out. So I hope you find this video beneficial to you. Tick like if it is. Any comments, don't hesitate. Anything else you need, don't hesitate to let me know. So I'll say good night to you now. This is the last video for the day. You take care. Enjoy your night. Happy trading. Look forward to catching you tomorrow morning. Bye for now.